advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. Hi there, welcome to this week's edition of MPC Markets Bulls versus Bears, part of the weekend edition. Episode 80, Trump brings home the semiconductor manufacturing with an almighty threat. They've all been welcomed home as long as they construct and or promise to construct. And if they promise to construct and then don't construct, they retrospectively will be slapped with 100% tariffs.
Oh,
so
nice one. And hi to all the listeners and viewers out there, and welcome to this week's edition. Been a busy week as well.
Yeah, it's been all things relative. Not as busy as the previous week. I've managed to not be running around like scrambling every morning to get something out by 9 o'clock. Sort of see here, I've been pretty proud of the ASX this week, actually, I've got to say.
Yeah.
It's been, because I think that, you can see here the Dow's down 0.37, the S&P's flat, Nasdaq's up a bit, but that's a fair bit of Nvidia and Apple based on these announcements to bring the manufacturing home. So the semis and the Mag 7 kind of saved it there, but we're up 1%. So go the little guy.
Yeah, exactly right. And the interesting thing is that it was all the interest rate sensitive stocks. So basically the market's pricing in rate cuts from the RBA, and our market has broken out to new highs. I believe it was a new intraday high yesterday and another record close. And interesting that have a look at the charts of JB Hi-Fi. Has broken out. Consumer discretionary has taken off. So Wesfarmers, JB Hi-Fi have led the way. So yeah, it looks like more spending by the consumers is what is the market. That's what the market's pricing in. And
so back in the olden days, i.e., pre-emergency zero rates in between 2007 and 2011. That weakening consumer would be a mad red flag for equities investors, and they'd smash it. But the optimistic headspace we have these days is that weakening in the economy means we're getting more cuts.
That's
so.
It. So buy the market.
So buy the market. So it's obviously Trump's made up a number of announcements this week. Just before we get into the stock highlights, really, I find myself I agree with the premise of what he's trying to do. But realistically, so it sounds like a massive threat, this semiconductors threat, but it's not. Essentially, most of those companies were already coming back to the US for manufacturing. He dragged out Tim Cook in the White House and did a dual press conference, and Tim Cook spoke, and essentially I think they're going to manufacture the glass screens in the States and interestingly, Apple's total manufacturing capex expenditure was $43 billion last year. They committed $600 billion apparently to bring manufacturing back to the US. But so moving on to the ASX highlights, JT, what? Run us through the.
Okay, well, the ASX has done it again. So they announced that TPG were buying out a software company, and it was actually a company called TPG Capital. And so they actually released that as an announcement. Had to recant it, and then actually had to cancel trades as well. And obviously on the back of that, ASX got smashed yesterday. And I read an article that Junbei short as well. So yeah, it just shows the incompetence of the ASX. And you've had your dealings with the ASX, and yeah, it's just one company that I just know that I cannot back.
Well, they've had the advantage of the monopoly, and essentially they've behaved the worst that a monopoly can behave. Essentially, I ran the Traders Association in Australia on the future side for a decade, and we were 30% of the market at one stage. And to be honest, there's none of us left. 15 years later, and we were paying millions of dollars to the exchange every month, and they categorically wouldn't listen. But they way overused their monopoly status to just do whatever the hell they thought, and they continually tinker and change things when things were going well, and bow down to the insto investors when they should be looking after the interests of the market, not just the one portion of the market.
Yeah.
But yeah, I would say ASIC and the RBA are already on the ASX's back. The fact that the National Stock Exchange, the NSX, which is owned by FEX, which I've had a lot of dealings with in the past. They had a lot of issues because a lot of the ASIC people previously were ex-ASX, so they could never get anything approved. It took 10 years to get approved. They bought the National Stock Exchange, but they've allowed the National Stock Exchange to merge with a smaller Canadian exchange now, and I think competition's coming, basically. So,
I think it has to, and also, like, if you look around the world, it's record volumes everywhere. So people,
except here,
yeah, exactly, and it's just basically, I read a few things. It's called the age of speculation. So everyone out there, especially the younger generation, they just want to have a punt, and if the ASX keeps acting like monopoly, people just go everywhere else, and people realize that. You can access crypto, you can access the US markets, you can access pretty much everything else. And if you miss out on the ASX, people are like, okay, well, fair enough. And just on the back of that as well, Iris, which is actually, my theory is that they're in cahoots with the ASX and, not really an innovator in terms of their platform. I've been using it since the early 2000s. Rumors are that's going to get bought out by a Canadian company as well. So that's
1.9 billion they're talking there.
Yeah,
which is a fantastic result for the most archaic piece of software in history.
Exactly right. Now I understand they do have the pipes, and when things do go hairy, like it is rigid and does its job, but I've just been,
but not 1.9 billion worth.
Exactly, and I've just always been shocked that there hasn't been a disruptor, because it's software, and software is meant to eat software. Basically, it's always supposed to constantly improve, but someone's just left them alone, and I'm guessing.
Well, the reason they've been left alone is we're still working on a back end on the ASX that's probably near 2 decades old.
Yeah, exactly right.
So
and that's what I meant, is that, like, you've got Computershare, Iris, and the ASX. They pretty much act like a monopoly, and I'm just glad that someone's going to try and break them up. Another Canadian exchange, and it'll be better for us market participants. But I've been saying this for a long, long time as well.
Yeah, well, it's hard to write new software when the ASX is, apart from their co-location, which is extraordinarily expensive. Where in effect our registry system's like 2 tin cans with a bit of string in between it. So but on to more positive things, EOS went ballistic this week. Space lasers, as we call it in the office.
No, we should call it drone lasers now.
Drone lasers. Yeah. Okay, no, fair call. No, but they are from space, so maybe space drone lasers.
There you go, even better.
But trying to fit in as many of those buzzwords, because it rallied 43% on Tuesday, I believe.
Yep.
And I had a look at it, and Drone Shield's at 3.5 billion to 4 billion market cap now, and it won 60 million contracts. EOS has won 120 mil NATO contract, and still lingering at 900 million. So for those who are interested, we bought a little bit of that. It wasn't an official rec necessarily, because it is pretty pretty punchy. But there's plenty of room to the upside. It's been a long time coming for that stock. But if it starts to get a couple of contracts, oh my Lord, that could be worth a hell of a lot.
Well, the whole defense space is it's going nuts. I mean, like ASB's been going off, L-Site as well, even Coden. So that whole sector, it's exactly like there's a lot of money going to be spent there, and there will be.
I think if you were spread trading, you'd probably be short Drone Shield, long EOS, because I think that one of them's very frothy, and one of them's probably everyone. If EOS was in the US, it would have rallied another 30% on the back of that 40%.
Yeah.
But in Australia, I had the COB in the afternoon, and they basically said, "Oh, well, it's up 40%. Could easily be down 20% tomorrow." Then, and I'm just like, that's the headspace we need to get rid of, because it's a great company, and if you win a 120 mil contract and you're worth 800 mil, that's that's an 8 times. The technology's already built. The capex is going to drop, and they're probably going to win more contracts. Pretty bloody cheap, I would have thought.
Yeah, exactly right. And so as we type, EOS is trading at 490, so still plenty of upside from here.
So where is that up on the day?
It's flat, so it's up 1 cent.
Yeah.
So so still time to get in. And we'll have to maybe write a proper rec on that one. But and the last one is for the ASX is Greatland Gold. So looks like that's going to be the front runner to actually list on the ASX 200, and that gets announced September 5th. So keep an eye on that. That's been a disappointing performance since it's actually listed. So so I'll have to dig around and
excuse the pun.
Exactly, and have a look at the company properly. I remember when it did get listed that people were saying that in terms of ounces in the ground and reserves, it's 30% lower than some of its peers, but that hasn't materialized into upside in the share price yet. So we'll just have to wait.
Yes, and you'll have to, and listeners and viewers, you'll have to excuse me. We're moving offices at the moment, so there could be some technical difficulties in today's podcast, including my dogs in the background. We've got when it rains, it pours. We've got people in the backyard checking the water system, and I will apologise in advance. We'll be in our new office in North Sydney next week, and back to a higher production value, hopefully. So highlights of the week: HIMS had a really good result, and essentially that is just more and more. I think people are sort of cottoning on to the idea that. It's expensive to go to the doctor in the States. You can go there at telehealth. You can go, and it sort of started out as one of those things like Pilot, where you go and buy the embarrassing stuff like erectile dysfunction medication and balding medication for men. But then now it does a bunch of other stuff, and particularly the weight loss drugs. And they're offering generic drugs, which would be, I think, really suits Trump's. He'll going in and supporting that sort of. Company really does shoot the big pharma players or wounds them a little bit. Palantir yet again had an outstanding result. Shout out to Richard Nader. If you don't listen to the Global Alpha podcast that comes out on Mondays, you should. Richie's back now. That podcast is in its infancy, but I think Kai and Richie are going to be talking quantum computing this week. I happily put my hand up to bow out of that conversation. And
all knows it's qubits. I don't know what that means, but it's qubits.
All I know. Another fun fact about it is it runs super hot. It's a hell of a lot of cooling going on. But look, it won that that $100 billion contract. Most expensive stock on the planet. The second place for the most expensive stock on the planet is half as expensive, but it still keeps going up. It does look like it's running out a little bit of steam. And I said it on the morning call podcast this morning. I'd have to ask Richie, but he tends to trade a little bit back and forth, and it has been a volatile stock. So it does look like it's running out a little bit of steam, but it was up plenty this week. We'll probably see in the heat, in that heat map. And Apple was up as well, just with the semiconductors. Look, Palantir up 14% there. Apple's up 5%. The rest of the market pretty negative. Eli Lilly down 14, which was overnight essentially, but realistically, Novo Nordisk was belted 30. So you can't it's probably not it sounds like a strange thing to say, but not a bad result to only be down 14. And yeah, so I wouldn't call it a mega positive week necessarily.
One thing I've noticed is that the financials look like they were running really, really, really hot. And I was talking pretty much from A to Z. So you had all the investment banks running, all of the exchanges running, all of the what do you call them? The rating agencies were running, insurance companies were running, and I'm not saying it's that they're going to stop running, but definitely the steam has a little bit come out, and yeah, it's definitely slowed down here. So
I think that's very much to do with that payrolls number and those backward revisions. I think what you said on the podcast, it might have been in last week or the week before, was like the economy's going well, the banks do well, and I think the fear that's coming through in the market now. That payrolls number was 73,000 and expected at 106, but the backward revisions were the biggest backward revisions since COVID. So
I think it's criminal that you can actually revise it that much.
Yeah.
I think if you revise something by 5%, 10%, hey, that's margin of error. That's okay. But we're talking 90% moves here. So
yeah, so that negative payrolls number that I've been looking for since December 2020 has likely actually happened. So
yeah,
they revised the 2-month revision minus 250,000 jobs off the numbers. Trump then went and sacked the commissioner of the labour statistics and. Because essentially he wants rates down. So overstating the employment numbers to the upside, I think the Fed would have cut. If these numbers had been accurate, we would have had probably near flat numbers 3 months in a row. But we've had 120, or we had a 120, a 150 and a 73. But 250,000 of that's gone.
So basically what you're saying is the guy that Trump put in there to cook the books did his job too well, or or he shot himself in the foot, and
Oh no, the opposite. I think that if they'd been more accurate, this isn't Trump's person, Erica, and I can't remember her last name, and it's really hard to pronounce, so I'm not going to attempt to pronounce it. But no, that if they'd been accurate, it would have given the Fed cause to cut sooner.
Yeah,
if we'd have had flat payrolls numbers.
That's what I meant. So that's what Trump wanted, but did he?
I dare say, well, he sacked this person. He'll put in someone that makes sure that the numbers are weaker now. And he did mention something on True Social and Twitter, etc. this week is 6 months of pain and then we're going to be the greatest economy in the world. So I really do think that is genuinely the plan. I think he wants there to be. I think that's why he doesn't care about the disruption of the tariffs. I think he wants the economy weaker to therefore get rates down, to then refinance that $7 trillion. Obviously, and then increase that stablecoin exposure as well to get the American public buying more of that debt, and then obviously then we get once it dips. He'll pull it back out with a bunch of outrageous comments and policies and God knows what. But I think he's trying to drive the economy down at the moment, and obviously he would never admit that. But all the evidence points to he's picking this thing apart at the seams on purpose, because the biggest priority is $7 trillion refinance, and up here, for every 1 percentage point, it's something along the lines of 400 or 500 billion a year in interest.
Mm-hmm.
So if he gets it down by 2%, say, that's a trill saving. It's like 3 times what the Doge savings were.
Yeah, exactly right. So yeah, I understand where he's coming from, but as always, Trump seems to have a good plan, but it's always the execution. So it'll be interesting if he can thread that needle.
Yeah, I mean, and I think he loves talking about how the stock markets was awesome under him last time. So the back half of his term is always going to be about, well, he will be backing the truck up personally with his family trust. Every president in history has gone into a blind trust. He said, is it a legal requirement? They said no. So he basically just went, well, I'm not doing it then. So I think he's treating the presidency as a way to set himself up for the rest of his life. And we laugh, but I think
he used the election. Don't forget what he did with the
the super PAC money. Yeah, that got him out of
with the Trump coin.
Oh yeah, of course. Yeah, well, that's if he's got to hold on to that for a certain amount of time, but it's something like $6 billion, isn't it?
Oh, but either way, so if we're talking about his holdings, but all of his friends were able to dump quite a lot of coins right at the beginning. So yeah, he's always in it for himself, and as we say, it's one of the things that you can actually you can count the clock on, that he's going to do stuff that he wants to, that will benefit him.
Yeah, which is, I mean, look, sad state of affairs, but we can't be ideologies. There's no place for ideology on this, particularly on this podcast. We've been in markets for way too long to realise that what should happen and what actually happens are two very different things. So
yeah, well, that's what happens when you deal with the markets for so long. You just get so cynical because at the end of the day, people do anything for money, and
yes.
That's basically what drives the markets, and that's what makes it so entertaining, and that's why we actually love it as well. So there you go. So that's a little sidetrack. So onto commodities, I guess. I guess the big thematic this week is the rebound of the metals. So copper, not so much. Copper's still down near the lows. So I really am looking forward for a rebound there. But the thing is, gold, silver, they had a little bit of weakness. Platinum as well. Over the last week and a half, and they have rebounded really, really well. Interesting that crude got smacked as on the back. I think it was OPEC had a meeting earlier in the week. The market didn't react to that, but then it started to fall, and they're like, "Oh, it must be OPEC," and I'm just like, "Okay, well, interesting that it took that while to actually hit to the markets." Bitcoin actually had a nice little move last night. I put in our chat that it looks like it's ready to run here, and US dollar weakness, and that's what's helping most of the metals rally this week, and just commodities in general. So that's pretty much.
I saw something from a hedge fund. The fund managers are the most bearish they've been on the US dollar in 20 years, which concerns me somewhat because it wasn't as crowded a trade. I was when I did the outlook for 2025 back in December. I was a bit of an outlier in calling the US dollar to get smoked, and there was a lot of opportunity, and that's why we put on trades like some clients have got crypto ETFs, but gold and silver, etc. We've made very good money for clients on the back of that. Overall, we've been on that for a long time. But I get a little bit concerned when a trade's really crowded like that because it tends to have those. Well, probably what we've seen over the last couple of weeks, we had that retracement back above 100 in the dollar index. Mm-hmm. It means that when everyone's on the trade, it tends to go a fair bit slower. I don't mind that copper had a settling period, like a down 25, 27% move. You're rarely going to see an instant bounce back. But I just like that it hasn't lost a lot more ground.
Well, it has to find a bottom here. These are lows from 2024, so it has to find a low here. If it does. Actually, maybe if it does shake out and shake out a few more weaker longs at these levels, it could snap back faster. But just in general, that move, and obviously on the back of just Trump making up 50%, it has been great for the copper price itself. So
just a quick one on copper. It's also we're just going back to that to our heat map of even the financials, etc., about the weakening economy. It is probably sits more on the side of industrial metal and is very subject to a weakening economy. So whereas gold, silver, platinum probably more on that store of value end. So I'm not necessarily surprised. I mean, for the banks and the banks and those positive, growing economy sort of stocks to be weak this week and copper to hold ground is actually probably not a bad result, to be honest.
Yeah, fair enough. Yeah, and that's it for the commodities this week. What's up next? Oh, here we go. Trade of
the week.
So, Barton Gold, future gold producer based in South Australia. And you look at their presentation, they're actually just going to follow the Capricorn model. Basically, just spend a lot on setting the mine up correctly to become a low-cost producer. And so this is the main stat. They're due to be a 150,000 an ounce producer by the end of 2026. So it's still a while away, the mine, getting it commissioned. But I looked at the average and used AI. So for every 100,000 ounces that if you're a current producer, you are rewarded with $1 billion in market cap. That's the average. On the lower end, it's like 0.7, and on the higher end is 1.3. But let's just say, let's take 100,000 at 1 billion. That's 1.5 billion. And Barton Gold is currently trading at $180 million market cap. And they also, came out with some earlier drill results. And that's what caused the most recent jump. So I think the low's in on this pullback. So that's where you can actually, quite easily manage the risk. Let's just say, it doesn't go anywhere and starts to drift back. Like that's what you're kind of risking. But there's the upside, 180 million to 1.5 billion. That's based on current ratios, and obviously, the mine and all of the construction and mining development going to plan, obviously. But that's one to have a look at. Barton Gold.
Yeah, no, that's that's where we quite often refer to the Lassonde curve. It's one of the most clicked on articles in our website, actually, in the education section. But this lead into production, when would they be in first production, JT?
End of 26. So
so that it's not a ramp up to 150,000 ounces. It's sort of that.
Oh, they've already got the resources there. They've got a mill being commissioned. So yeah, it's not like it can get switched on straight away. But they've got a 10-year mine life at 150,000 ounces. So that's without extra drilling being involved as well. So
yeah, but look, this is the sort of thing. Even if you get on the low side, it's probably a 3-bagger potentially.
That's what I think as well. So,
yeah, provided if they're good operators and they're good management and they don't bugger up and cap raise the crap out of it, which junior mining companies do love to do. But yeah, look, risk reward there. That chart's a beautiful setup. Stop around 60, get in here at 80. What are you risking? 25% for 25 to 30% for a potential 300. The risk reward on that trade is just, that's the sort of stuff we really look for. And I can't really see gold going anywhere. But I certainly don't see it halving. Strangely enough, I was doing a little bit of research this week because our fixed coupon notes for this month, and I was putting in some. There's a couple of gold companies going into because there's been a bit of recent volatility, and but I just went back and did some historical research on the likelihood of there being a 30 or 40% pullback. In the underlying gold price, because a company can still be going well, but if gold comes back off, and I'd never really done that before, but it's only happened in the last 60 years. It's only had a 30 to 40% pullback twice, ever. So realistically, where are we now? At 3,400. The max pullback, based on his historicals, is maybe somewhere in the mid 2,500s. I think that was our call at the start of the year, wasn't it, JT? Or we were calling it to 2,700, and we were everyone was like, "Well, 2,700."
That was,
or it might have been a year ago.
No, it was about a year ago. So I remembered I started calling myself the self-proclaimed gold bug on AusBiz, and that was when it was 2,400. And I was saying it'll get to about 2,700 on this move here. So yeah, if it does pull back from here, as you said, from 3,400, we're talking back to levels, early sort of midway through last year.
It's not that big of a deal, and these guys are still all making record margins, basically. Yeah, no, I think Ausbiz really jumped on that gold because I'm more of my view is more short US dollar rather than gold, and I've copped a fair bit of teasing on on Ausbiz because of you being the gold bull. So they love to we just asked Jonathan about that gold stock maybe, and I'm like, yeah, righto. But yeah, they're kind of the same trade.
It certainly is. Look, it's all about. We just know the central banks are going to keep printing.
Yeah, exactly.
And that's what it's all about. You just have to, and as I've talked about in our chats, it's all about just picking which horse is running at the fastest at that point in time. Like, so sometimes equities are going to run, sometimes the harder assets are going to run, but just understand that it's all about the money printing, and that's what makes the values go higher, even though in general everyone's going backwards. So that's how it works. Oh, here we go. See you there, fear and greed. Oh,
so we're back to neutral territory.
Neutral.
Which doesn't necessarily surprise me. I mean, we were ones where we introduced a new scale last week. Obviously, you can be anywhere up to a 5-star bear. We were only 1-star bears last week. We only got it wrong by 1%. And
yeah, I noticed that as well. Like we actually we were both bearish, but the market was up by 1. It wasn't 1%. It was actually
1% for the S&P for the week.
No. So. It was 1 point. It was like 33, 39 or something. Oh, sorry. Or I forget the number, but I was like, oh, we missed by actual one number. So.
Okay.
Yeah. So it wasn't actually a full percent either. So either way, we'll have to classify that as no, we got that wrong. But yeah, I'm just finding it interesting that the Nasdaq's actually not quite at record highs, but the market's been positive this week. Apart from that, pullback from non-farms, but the market's gone back to neutral. I would have thought it'd be a little bit more bullish. So I'm actually we'll go towards being bullish for this week. I think that the fact that there's a little bit more caution in the US makes me think that we could keep on squeezing a bit higher. So I'm bullish for next week.
I am also bullish, and I'm based on that payrolls number. My general thought was, and I've been saying it in the morning call podcast, going back to a high level of cash by the end of the month. Well, and initially it was sort of in the first fortnight of this month. That payrolls number, the song and dance around the commissioner being fired, the movement at the Fed now, and the appointment of a temporary Fed member, and all this sort of palaver. I basically think that payrolls now is just very much. It's always been the big show, but I think what we'll see is sensitivity around those weekly jobless numbers and the jolts, and I think everyone is going to wait to make a key decision either way. I think the key catalyst will be next payrolls. So and I sort of tend to think that I don't think we're going to go anywhere much for the next, say, 3 weeks or so. But I don't think there's going to be. So I don't think there's going to be any significant move until we get that following payrolls number. And if you're firing the commissioner of the labour statistics, as we discussed earlier in the podcast, we know what Trump is going to be telling the person who's going to go in there and temporarily replace them. It'll be, if you want the job, make sure
that's it.
Because make sure you give me what I need. And what he needs is a lower number. So I think we'll drift, and I think it'll be very difficult to pick positive, negative weeks for the next few weeks, because Apple and Nvidia kind of saved the market this week a little bit with the semis and things. I think there'll be a few positive announcements coming up. We've got CPI and PPI next week as well in the States. So he keeps on banging on about prices being lower. So I think what we'll end up he's fired someone that the Bureau of Labour Statistics is on. They know now they're on trial, and that if they don't give them, that your job's gone if you're not delivering what Trump wants. So he's not going to want to. He's not going to want to say that there's this inflationary pressures and the dreaded stagflation. He's just going to want the jobs numbers down. So, and I'm tipping the person who's in charge of the inflation numbers will be getting the same nod as in terms of what you need to do. So I think that's why I'm bullish. I think the inflation numbers will somehow magically read that prices have come down, and then they'll do a bit of creative weighting, and then and that'll push the market a little bit higher overall. But the market is a little bit nervous. I still stick to that seasonality plan in terms of I think September is going to be a shocker. But I think it's just got that little bit to squeeze more to go. So we do have earnings in Australia starting next week. JB Hi-Fi, Car Group on the Monday. We've got what have we got? CBA on Wednesday, Suncorp on Wednesday.
I had that sheet similar here as well. So I was,
I forgot to put it on. Technical difficulties yet again, people. But and not much in the way of earnings for the US. No major names. But Pro Medicus is on Thursday. Telstra's on Thursday. Origin Energy as well. So one that I'm having a look out for. Richie Nader is liking 10 Cent Music again. Earnings is next week. I like Oklo on Monday. This is a small modular reactor business that's done that deal with Liberty Gas. And I think Cisco's on the Wednesday. But nothing market moving. No major, there's nothing that's going to, it'll have an individual stock move and it'll be very stock specific, I believe. But we'll be, nothing that's going to move the index overall. So apologies for not having that calendar up. The calendar is available free online at mpc.markets.com.au.
I've actually got a printout here, so maybe no.
No, we won't. We won't. There's not that much technical difficulty. It's just isn't that the point of these things? We're supposed to send people to the website, so the marketing department keeps saying.
That's it.
But so I think but I believe very stock specific for your portfolio for the next 3 weeks. I think you can still get stocks that'll run, and they could, and obviously, and still have earnings and things. But from a broader index standpoint, I think we're. I'm a 1-star bull this week.
A 1-star bull. I'll go with a 3-star bull. I think it'll keep just grinding higher, and I think the ASX earnings season will surprise a few people.
I agree.
Like the fact that we pushed out the new highs and it was like JB Hi-Fi and Wesfarmers that led the rally. I think there'll be a few surprises, and I think it'll be to the upside. So I'm setting new highs for the XJO again next week.
CBA will report, and it won't go anywhere near justifying their price. It'll dip 7% and then probably grind straight back to where it was before by Friday, I'd say, is my pick there. And I think the same for JB Hi-Fi on the Monday. Mm-hmm. Where it's priced is ridiculous. However, so there'll be initial knee-jerk reaction. You can't justify your price, forward earnings growth, blah, blah, blah. And then the mindless green robot will come in and just keep scooping and scooping and scooping. So
absolutely.
Pro Medicus will be interesting because it's a ginormous company now. That's on the Thursday. And I wouldn't imagine the likes of Suncorp or IAG that are sort of midweek will do particularly well after that. All of those claims on the south, on the the east coast of Australia, and you might see some pullback there. But my favourite tactic, I think, is I've been having a bit of a crack at the analysts, and particularly wrote a piece on Telix this week about.
That was a good piece of investigative journalism right there.
Well, AI makes it easier, but sadly for the state of the analysts in Australia at the moment, like. Took less than 30 minutes for me to completely debunk like 3 common truths that's going on in that stock. And then someone came back at me last night and on Twitter and said, Oh, well, yeah, until the tariffs come along. And then I was just like, oh my God, they manufacture their US drugs in the US, all of them. They don't import at all. Yet again, I went to perplexity and I pulled up the numbers because I needed to be able to, and it took 10 whole seconds. So yeah, outside of those major names in the Aussie market, I don't think there's any analysts left, and if they are, they're probably just kids. Because it's not. It's and I sort of likened it to ResMed, and again, I'm copying an absolute pounding on Twitter at the moment. How is Telix like ResMed? And I'm just like I was comparing the move back in 2023 where panic selling saw ResMed go down to $20, and then now it's back at 45. But again, I wrote an article for Livewire at that point and basically said, well, let's look at the science, and based an article around a Harvard Medical School journal article, and we backed the truck up on both CSL and ResMed at that point, but the market panicked, and what happens was that they all read the Novo Nordisk and the Eli Lilly research and didn't read the other side, and they panicked, and then everyone's then started copying each other's homework, and it became a common truth that they were going to cure sleep apnea.
Yeah, and as I've had discussions with you, like we're in the age of social media and echo chambers. It's that like basically, if you have a narrative and people follow that narrative, the algorithms just keep feeding that narrative. So yeah, that's where you get these things that sound quite true, but they actually are quite false. So yeah, interesting there. I've got to finish up, guys. So
no worries. You're heading into the call, so
yeah,
that's why we didn't do the media section. But thanks everyone for joining us, and we'll talk again next week.
No worries. See you later.